What are some of the levels you're watching here?
Well, something different and interesting is happening, Kelly, in the currency market today, and that is the dollar is actually weakening for a change. Why? Well, after all the hand-wringing about China and Europe and global growth, the U.S. growth picture is now the market's main worry. Also, the odds are spiking for the Federal Reserve to cut interest rates, which would weaken the dollar as well, with the bond market now fully expecting it to come by March. And other safety plays are really shining in today's market. We're talking the Japanese yen, the Swiss franc, traditional places to put your money in during panic moments in the market. And there's another factor at play, and that is President Trump. In his coronavirus update to the nation last night, the president took a swipe at the Fed and the strong dollar. Listen.
We've been hurt, in my opinion, very badly by our own Federal Reserve, who has also created a very strong dollar. That's something nice about a strong dollar, but it makes it much harder to do business outside of this country.
And the president has been effective at driving down the dollar with words like that before. He's actually also threatened he may do something about it before, like direct the Treasury to actually step in and weaken the dollar to help the economy. No threats here yet, but the mere complaint from him about the strong dollar spooks the bulls. Now, we should mention the dollar had been on a big upswing this year, and that's been tough for companies that are big exporters and multinationals. So this fallback could be a sliver of good news in the overall market sell-off.
And Sarah, Kelly? I know people in the market are more focused on things like the Japanese yen, but a lot of Americans who are looking to travel might see the euro below $1.10 and think, hey, that's a great time for me, and that activity might usually mitigate it. But no one's going to go to Europe right now, I don't think. I'd be shocked if people felt like this was the right time with coronavirus.
No, you don't hear much talk about the weaker euro and therefore plan all your trips to Europe. What you are going to hear is companies from Coca-Cola to Nike who are just sort of getting over the impact of a strong dollar in the last few years. They're going to start to feel it again and to start warning about it again. And that's actually a sort of secondary negative impact to the already slowed down Chinese economy when you start to look for these multinational earnings. The big question is the market going to give them a pass on the weakness in China and on the weakness coming from abroad as a result of that strong dollar?